Matt, we are back for yet another episode here of Knight Brothers Commentary. A lot of things going on right now, current events. The world is kind of in a crazy place in terms of just what's in the news cycle, coronavirus. The stock market seems to be all over the board. A lot of uncertainty, I think, just due to a lack of information. But considering that almost every news outlet is pounding that story into the ground, we are going to talk about something a little bit different tonight, which is kind of getting us back into the mind of Matt Knight, if you will, in another proposal that he has for us. And I always like to call this out because Matt puts a tremendous amount of time, effort, energy, and work into some of his policy and or practice proposals. He has a lot of documents that I have not read in their entirety, but I've seen. And I think he does a really good job in trying to weigh all the factors, be as unbiased as possible, and present something that in his mind would work for the majority of the people out there. So tonight we shift our focus to the topic of federal taxes, something that affects all of us in one way, shape, or form. And I'm excited, Matt, to kind of hear what you have to say. So with that, let's go ahead and jump in on the Knight Brothers Commentary, Federal Taxes.
Today, what we're going to be talking about is basically another tax reform, if you will, replacing, at least in my opinion, Trump's tax code. So,
and let me ask you this: and I know we don't want to talk about Trump's taxes, but to make it relevant for our audience, the taxes have been, well received by some. The interesting thing about the tax plan was that it cost everybody less. Now it cost some of the big corporations, even more less, right? So there was even more of a cut for corporations than there were for citizens. But what is it about his system that you don't think benefited us or is working?
I would say for me, from what I've heard, there's actually a lot of people who actually ended up paying more taxes because they couldn't deduct. They removed some of the deductions.
So even though their federal tax rate may have gone down, they were not able to deduct as they had previously, thus resulting in a net increase in taxes.
Yes.
Okay. I was not aware of that. So interesting note. So anyways, as I always do, I'll apologize for cutting you off 5 seconds into the broadcast.
That's fine.
So let's dive back into it.
All right. So we're going to be talking about the new federal income tax brackets that I have actually come up with. Perfect. And I actually kind of broke it down into 3 separate brackets: 10%, 15%, and 20%. And 10% is basically anyone with an income of $200,000 or less. For single filers and joint filers, it's $400,000. For the 15% bracket, it's basically everything from $200,001 up to $750,000 for single filers, and then $400,001 to $1.5 million for joint filers.
Yep. And
then for the 20% bracket, which is basically the ultra rich, really, that's probably the best way to put it.
Yeah.
It's basically everything that's higher than $750,000. And for joint filers, it's everything up from $1.5 million.
Yeah. Perfect.
Now for the corporate tax rates, they're actually kind of similar to Trump's.
Yeah.
But with one major difference, and I will actually get to that in a second. So
fair enough.
The first one is basically going to be 21%, and that's basically all businesses except for goods-producing businesses with less than 150 employees and or pass-through entities. For the 23% bracket, that's going to be pretty much all goods-producing businesses. But the difference between this tax bracket and the other one is that this one combines both corporate and individual income for the owner.
Okay.
And the same thing goes for the 25% bracket, which is basically everything, which is basically all the pass-through entities except for 1099 contractors. 1099 contractors have a different tax. They basically have to pay a 5% income tax and then a 15.3% self-employment tax, which is basically roughly 20.3% combined total income tax.
Yep.
So that's basically the main gist.
So let me ask you this. Yeah, no, I'm just curious how. So when you talk about, I'm just trying to wrap my mind around the personal income tax combined with the corporate tax for owners, how does that play out? So they end up paying, are they paying both? Are they paying the lesser of the two? Are they paying some sort of like combined rate?
It's basically a combined rate. So basically take everything that they have earned individually as the owner of the company, plus everything that the company has made, combine them together, and then they pay that rate. They pay the 23% as opposed to anything in the individual tax brackets.
Okay, so business owners now are no longer paying personal income tax. It's whatever income they make out of their business, they roll it in combined with the total business tax.
But only if they are. Well, this is not for the major corporations. This is just for smaller companies that produce goods.
Right. So we're not talking about, somebody who owns 51% of Microsoft or something.
Yeah.
We're talking about these are small. But I mean, I look at this. It's all of them listed in these brackets are under 150 employees.
Yeah.
That's what you have listed here.
Yes.
Okay. That's what I just want to clarify that because people are going to wait. Well, what about technically I own Amazon. 0.1%, because I'm a shareholder.
Yeah. We're not talking shareholders or anything like that, just like true owners.
Perfect.
Or just majority owners, if you will.
Fair enough.
Now, the difference between my plan and basically most tax plans from decades and decades ago, including Trump's, is that mine does not have any deductions.
Okay.
You cannot deduct anything. So basically just kind of like the standard federal deduction or the SALT deduction, which is basically the deduction for state and local taxes, marriage and divorce penalties, student loan interest, business interest, or even itemized deductions like your 401k or like family deductions or anything.
Home ownership.
Yeah, none of that applies anymore.
Fair enough.
But in exchange, I did that to lower the tax rate. So hopefully it shouldn't affect most people or at least not affect them in a very severely negative way.
So and I'm just summarizing here, and I realize that if you're a listener, there's obviously going to be thousands of questions. Neither of us are tax attorneys, right? So we're not going to solve your problems here. But what I think, Matt, the essence of this is kind of getting towards is let's simplify a little bit. Let's just lower the tax brackets so that we're talking about smaller, more manageable numbers from a net income tax rate, and get away from some of the convoluted, complicated, deductions, et cetera, tax credits, all this stuff, and just make it simple.
Yeah, exactly. That was the whole point of this, just to try to make it a little bit more simple, a little bit more efficient, so that way people don't have to be like, okay, like what can I deduct here? What can I deduct there? Blah, blah, blah.
And again, as I say all the time, Matt does the legwork. He does the notes. He puts the information together. I do not. So I'm going to ask a question. And if you don't have an answer, this may be something to add to the show notes if we can find an answer. If we were to implement your changes, okay, how would that overall affect the federal income in terms of if we applied today's tax filers, their income, take out the deductions, use the rate table that you've provided, how much revenue does that generate for the federal government based on this plan? Do you have any idea?
I actually have not done any statistics on that.
Okay.
And
that's fine, Matt.
Yeah, but I would say for me, I hope that the goal is to actually have like average people like you and me pay less, right, and then have richer people pay more.
And that's fair. I mean, that's, again, it's one of those things where it's hard because you have to strike a balance, right? Because the rich people got rich by taking on risk, starting companies, putting themselves out there. And candidly, they're the individuals that, drive a lot of our thriving economy, right? Without entrepreneurs, business owners willing to invest, our economy doesn't look the way that it does. And today's not a great day to talk about it as the market's, plummeting due to some of the coronavirus fears. But for the last 8 or 10 years, we've been on a steady ride up. And, I just think that you have to be careful anytime you're talking about, asking the rich, quote unquote, to bear more of the burden, is that you don't want to make it so stringent that you thwart you thwart the next wave of creators, entrepreneurs, investors, risk takers that are going to come out with that new innovation that we all know and love, right?
I mean, to be fair, yes, but when you really think about it, I mean, at least from what I've noticed, a lot of people have gotten away with a lot of crap. I mean, they store millions upon millions of dollars overseas where our government can't even touch it.
Matt, I don't disagree with you. Some people would call it, I don't know. I don't want to get us too far off topic.
Yeah.
They figured out a way to make the system work for them.
Yeah.
And I can't fault anybody for doing that. It's obviously the sign.
And I agree.
It's the sign of a system that isn't totally buttoned up. And so
Yeah.
I think what you're presenting here, simplifying it and getting everybody to where they understand it, might
level the playing field.
Correct. And
also just kind of hopefully at least try to get the rich paying at least a little bit more by trying to get rid of some of the loopholes in the system to where, okay, they can't cheat the system anymore.
Yeah. And Matt, I don't disagree with that. I think we have to discourage somebody from taking that out that allows them to, make a ton of money, whether it's their own business, investing, whatever it is, and then not pay a proportional, share when it comes to the rest of us,
Yeah.
And so I do think, again, it's all about striking a balance. We try and present something that we think is most fair for everybody. And that's really what I see in this proposal here from Matt. But also understanding that it is a maze, it's a labyrinth, whatever you want to call it. It's a very complicated system today that I don't think. I mean, even I don't fully understand it. I don't know if you do, Matt.
I wish I could understand it. But
yeah,
I didn't even study finance in college, so
yeah.
I probably even have less of a chance than you.
Yeah, so we'll avoid going down the rabbit hole, but I do like the idea, Matt, behind simplification. So getting us back to kind of the notes and the breakdown here, we've talked about removing the deductions. That's all gone. So what else? What comes next?
I would say the next thing I want to talk about would be the property taxes.
Okay.
Now, I mean, by all means, correct me if I'm wrong, and anyone who is watching or listening to this, please comment down below as to whether or not I'm right or wrong. But as far as I'm aware of, the federal government right now does not have any standard property tax.
You know what?
Aside from the death tax or the estate tax, as we would probably associate the correct term with it.
You're saying it's handled on a local level.
Technically, yes.
Okay,
property taxes are usually handled on a state and local level, as far as I'm aware of.
Matt, it's a great question. I own property. I have no idea. I know I pay them.
Yeah.
I don't know who I pay them to.
Yeah, so you might want to figure that out, but
I probably should.
Yeah. Anyway, going back to the notes, the tax brackets here are basically going to be 0.5%, 1%, 1.5%, 2%, and 2.5%. So the 0.5% is basically for 1 to 2 mil, depending on whether or not you're single or joint filing.
And are you saying this is property value?
Yes. So basically, this is a tax on real property, which is defined in the notes as the land and the things permanently attached to the land. So this is like homes, garages, farms, corporate buildings, et cetera, et cetera. So basically, if the building is worth $1 million and you're a single filer, you have to pay a 0.5% tax on that property.
Fair.
And the same thing, and it basically just kind of goes on up. So,
but for the majority of us who don't own $1 million worth of property.
Yeah. I mean,
there's no change.
Yeah, there is honestly no change. This is basically just, I may sound a little bit biased here, but I actually kind of got inspiration from the really ultra rich wealthy tax that Elizabeth Warren was talking about. And I'm like,
Elizabeth Warren, I thought her name was Pocahontas.
That's pretty good. But still, I figured that, I don't know, I guess I'm not as, I know I'm not as conservative as people may like.
Matt, you're allowed to have an opinion. You don't
that's true. And that's
you don't
true.
have to apologize at all.
That's true. But what I'm saying is I just feel like the rich have just gotten away with a lot of corruption and a lot of cheating in the system. So if we could just find a way to make them pay a little bit more tax, so that way we can generate a little bit more revenue to actually fund things that we need, like public infrastructure.
Yeah.
I'd say for me, that's kind of I'd say it's a win.
Matt, it's a good thing, and I want to make this distinction. And I follow both sides. I'm not going to get into my own beliefs here, but I follow the liberal left-leaning side. I follow the conservative right-leaning side. And what I'll tell you is, without revealing, too much of my own personal biases, I think by and large, a capitalist system does work when we're talking about a free market economy. But, just because if you want to say, a lot of people I think on the conservative side are a little apprehensive to ever say anything negative about capitalism, right? Because capitalism's, that's the free market economy. That's what drives the economy forward and is the quote unquote American dream. And I happen to agree with that. However, you have to be willing to call out, crony capitalism or corruption when you see it. And some of the side effects, if you will, if capitalism is it's not a disease, I don't think, but if it's something and there's a symptom or a side effect, right? The side effect might be that some people have taken advantage of the system. They've used what is a great free market system, and because some of the complexities and the loopholes that you've identified, we do have a certain portion of the upper class, the 1%, that is evading paying their fair share and doing things the wrong way. But I like to make that distinction because, if you do listen to somebody like Elizabeth Warren or some of those on the left, they would have you thinking that all the rich people are bad. They're all greedy. They're all, SOBs that don't care about the rest of us. And I just don't.
And that's not true.
And it's just not true. And that's so. I guess what I'm trying to say is there's truth on both sides. Could they be doing more? Could we eliminate some of these loopholes to make sure that everybody's in compliance and we're all paying our fair share and moving the system forward? Yes. But to the other side of that, there's a lot of rich people that do a lot of good for this world through donations, through entrepreneurship, innovation, philanthropy, etc. And I just don't like to lump them all into that category because I just don't think it's fair either.
Yeah.
So yeah. I just like to call that out because we're painting with broad strokes and we all know the devil's in the details. So anyways.
Yeah. So I would say probably the next thing I really want to talk about is a new federal sales tax.
Okay.
And for me, I would say the sales tax is probably going to be, in the current system as I know it, it's a little bit more complicated because there's actually no online sales tax.
Yep.
So, say what you will, but I feel like that's like a massive mine that we could just be siphoning money from.
Yeah.
Because at the end of the day, if there's no way we can actually apply any kind of local or state sales tax on those kinds of purchases, should the federal government be doing that?
Right.
Now, I'll be the first to admit that this could potentially be overstepping the federal government's authority, but the Commerce Clause does say that with regards to regulating international commerce, or at least in this case, interstate commerce, Congress does have that power. So technically, a federal online sales tax, which for me is going to be 2%, because I kind of want to keep it a little bit lower, just to, please the conservatives, because, lower taxes is usually better. But
it's zero right now.
Yeah, it's zero right now, but
so
I feel like...
Can't get lower than that.
Yeah. Yeah, so for me, I just feel like when it comes to an online federal sales tax, I feel like that's just something we need in order just to generate more revenue for the government so they can actually spend it on things that we need.
Yep.
And just to try to, crack down on loopholes in the system that we have. Because, if you can avoid like any kind of tax by selling something online as opposed to in a store, to me,
some of that is changing.
Yeah.
Some of that, I know that for a fact that some of that is changing. And what Matt's alluding to is that, with how quickly online e-commerce, let's call it, has just exploded onto the scene, buying and selling online, some of it's been kind of a free reign. There's just been no way to capture some of that in terms of states applying their state sales tax.
Yeah, because technically an online sale could be anywhere.
It could be anywhere. But now there are states that are starting to crack down on it. I know just from some of the work that I've done on my, I have a full-time job, but I also own the company Ditto.
Yeah.
That there are systems now that are requiring online sellers to integrate into their payment processing the ability to track where the purchaser is buying from domestically and apply that state's sale tax to the purchase price.
Yeah.
So it's starting. I don't know. Again, I'm not a legal expert, and I don't know exactly. I just know that I know that I have the payment processor, so that supposedly from a legal standpoint, I'm covered as an online seller. But
Yeah.
I know I understand some of that. I am curious because I think I'm going to disagree with you, and that's always fun, around some of these sinful purchases as you have listed on here.
Yeah.
I'm just curious what that's all about.
Yeah. So for me, basically a sin tax, as it's called, is basically
Not syntax, a sin tax.
Yeah.
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 I'm just being punny.
Yeah.
Yep.
Yeah, that's fair. But basically a sin tax is a sales tax on basically anything that society has deemed inappropriate. So like gambling, tobacco, alcohol, marijuana, et cetera, et cetera.
Yeah. I know that, again, states tax the crap out of some of these things.
Oh, that's true. The states literally do tax the crap out of it. So I feel like if the federal government can get a little bit more involved, I feel like that's probably a good place to generate more revenue, and B, hopefully, shall we say, limit some of these behaviors as we should, or sinful behaviors as we should probably call them. Because if there's more taxes involved, then that makes the so-called goods or products more expensive, and if they're more expensive, then hopefully people will be less inclined to use them. So that's really kind of the two goals that I had in mind with these sin taxes.
So the first goal, Matt, and I don't mean to cut you off, but the first goal, I would agree with you. It's certainly going to generate more revenue, which is you could argue it's a good or a bad thing. I mean, I'm not a big proponent of giving the government more control of anything. I think they don't do a great job managing a lot of the things that they already have under their tutelage, but that's another conversation for a different day. Now, the second argument that you've made in terms of discouraging some of these purchases because they're, quote unquote, deemed by society, which I just find it ironic because you and I have had a lot of discussions about societal norms that you don't agree with.
That's true.
But I'm not going to get us down that, avenue either. I guess where I'm going is I think it's hard to legislate cultural things. So,
and that's, to be fair, I mean, that is true. That is true.
I just think if somebody, if a part of their culture, so to speak, or their friend group or whatever it is that they do aligns around gambling or smoking or drinking or whatever, until you start really implementing cultural changes or providing, I guess, incentives to change behavior that way, I just think, you'll make more money, but the people that like to smoke are going to figure out how to buy that pack of cigarettes, even if it is a little bit more money.
And to be fair, I mean, you are right on that.
I think in terms of the revenue piece, I get it. And I understand why we've historically, on the state level at least, targeted some of these quote unquote sin purchases. I totally get it. But I'm just saying, if you really want to affect change, I would just tell you, I don't know if you're really going to see a tax totally change behavior, especially at 2%, because it's so. It would be a lot of money in the sense of pooling all the federal funds together, but on the individual level,
it's really not that much.
Yeah,
and I agree.
Yeah.
So I'm not saying that these taxes are gonna like rapidly change society within like 2 decades or so.
I know you're not.
I'm just saying that maybe they'll think twice about.
Yeah, and that's fine. Listen, I totally get it. At the very least, and again, I would not go along with this just because I don't advocate for the federal government being more involved in my life.
And here's the thing. Yeah. I mean, me being a libertarian, I do agree with that sentiment to an extent.
Yeah. I'm not an anarchist by any means. I'm just saying, I think.
I mean, the more power that the federal government has, basically, the more corrupt it could potentially become. That I totally agree with that. But I feel like on the other hand, our federal government does need more revenue. And I feel like this could be a very effective source of revenue. Especially with regards to how gambling has kind of blown up in the recent years, especially with sports gambling becoming legalized.
Yeah.
And so basically, let's say if you win like $1,200 from like a slot machine or bingo, you would have to pay the 12% tax. Or if you won $1,500 from Keno games, I actually don't.
Keno.
Keno. Okay.
Yep.
I actually don't even know what they are because I don't really gamble all that often. So
Fair
by all
enough.
means, let me know in the comments.
Yep.
And then $5,000 from poker tournaments or something. That's when you have to start paying taxes. So if you like make $300 from a slot machine, you don't have to pay taxes on it.
Fair enough. So what else?
Yeah. So, and I want to make this distinction for gambling clear. Non-professional gamblers, kind of like the average Joe, like you, me, and everybody else,
Yeah.
that kind of income will be part of your regular income.
Okay. So it'll just be a line on your.
Yeah.
Okay.
Yeah. So basically, I mean, you have to report that income as like other income, like you would normally.
Fair enough.
As far as I'm aware.
Yeah.
But professional gamblers, they have to go with the 1099 form.
Like a contractor.
Yeah. So like an independent contractor, if you will.
Yeah. Makes sense.
Yeah, I'm not going to go through every single line
No,
because that's
we
going
don't
to
need
take
to.
all day. But
No, we don't need to. And again,
Yeah.
Matt always uploads the show notes so you can
Yeah.
see everything that he's laid out here. Hold on a second because you skipped over one at the top. And I'm curious because I am way against this. And I want to get your thoughts because I always want to hear you out. But this is inheritance / estate or death tax. Matt has some things broken out here, and I'm just curious how you see that playing out.
yeah, so basically I actually kind of lowered the estate tax
Okay.
as far as because I mean, by all means, correct me if I'm wrong, but I feel like if I remember from my research, I feel like the regular estate tax was like 40% or something.
Yeah. And I don't know
Yeah.
what the current rate is.
I could be wrong on that. So by all means, anyone watching or listening, please correct me. But with regards to the brackets, I basically have a 3% for the inheritance and a 7% for the estate. For any estate that's basically at least $3 million in worth for a single filer, and then $6 million for a joint filer.
Yeah.
And here's the thing though, there is an important distinction that you have to make when it comes to the inheritance versus the estate tax.
Yeah.
The estate tax is basically a tax before the assets are given to the beneficiaries or the people inheriting whatever property or estate that you're getting, while the inheritance tax applies to the assets after they've been inherited. I want to tax it both ways.
Yeah. And here's what I'd tell you. And the reason I just kind of brought this up is I just don't. And I understand there's the federal government. I'm not advocating that the federal government not be involved in taxing or doing all these things. I mean, we got to generate revenue. There are public works and things like that require federal funding. The death and inheritance estate tax stuff is one for me that I don't know. And I don't know all the details about it, but I just can't wrap my mind around how somebody works their whole life, right, to build up their eggs, so to speak. They've been taxed on it through income tax, sales tax, property tax, all these different things. So they've been taxed quite a bit. And then in order for them to give any of this wealth that they've built up over time to their family, they've got to pay massive tax on it again. I think it's a cash grab. I mean, I just don't, and I don't know. Again, I'm not an expert. If you're an estate tax attorney or somebody like that, and you want to educate me on why we have to have it, I'm all ears. I just don't understand how somebody can go their whole life paying taxes, state, local, federal, etc., and then when they die, in order to give that to their children or whoever else, they got to be taxed again at such exorbitant levels. I don't get it. To me, it just doesn't seem fair.
I mean, I suppose that's a fair argument, but
it's in there today, and
yeah,
I understand.
I mean,
you've improved it based on what your research is showing.
Because from what I remember reading, the rates were a lot higher. So if anything, I actually dropped them.
Well, good on you. We're thinking in the same direction. So I didn't mean to jump around on the sheet, but Matt, we can round this out with the payroll taxes if that's where you want to go lastly.
Yeah, so with the payroll taxes, there's really two forms that I've come up with. Basically and the reason why I actually increased the payroll taxes is basically to actually help fund public transportation, which we'll talk about in a future episode. But
okay.
But basically,
I know you're a big proponent.
Oh, I'm a huge proponent of public transportation.
When done right, I agree with you.
I mean, because say what you want, but there's a lot of people in this country that need it, who especially can't drive.
Matt, I agree. Listen,
or probably shouldn't drive.
I've been to Europe several times. It's phenomenal how easy it is to get around and, whatever. I don't want to, again, rabbit hole.
Yeah.
but-
So basically, the two forms of the taxes I have are 11% tax to fund Social Security, a 2.9% tax to fund Medicare, and then a new 1.4% tax to fund public transportation across the U.S.
Okay.
While the other form is basically the same, but instead, companies actually pay for memberships that their employees can use year-round for all forms of public transportation.
Okay.
And again, we'll talk about that in a future episode on public transportation because I feel like that deserves its own talk, in my opinion. But overall, I mean, that's pretty much all I had on the notes. So if you have any more questions, Brad, I'm certainly more than willing to answer.
No, Matt, I think, and I'm not trying to create a bunch of legwork for you. I do think it would be an interesting exercise at some point, and I know we've got other things lined up for our next couple of episodes, but it would be interesting to take some of your proposals here and do a little bit of the math to find out where this puts us in terms of our federal tax revenue, right? And what that looks like. Because I think in 2019 it was somewhere around, we talked about it with the Medicare for All, it was somewhere between 3 and 3.5 trillion was what the income was in 2019 fiscal year. So I'm just curious if we were to apply all these metrics, where we would come out. Would we be ahead, behind, about the same? And just see where that lands us. But Matt, I listen, and I say this all the time. You do a tremendous amount of work. You do a tremendous job putting these things together. And what we're always trying to drive towards is something that just works better for everybody. We've talked about it on immigration. We've talked about it on healthcare. We talk about it on a lot of different topics. And I think it's cool because it's just new ideas. And they're very well thought out, and you do a great job. So anything else on tonight's episode?
Nope, I think we're good.
All right. That's it from Night Brothers Commentary. Have a good one, guys.